यार
We are
क्या
just
इंट्रो म्यूजिक बजाऊंगा क्या मैं?
no. So intro. No. I'm just gonna. I'm posting it on both Slack. So we have.
अच्छा अच्छा अच्छा.
Okay. So welcome, guys. We have a discussion on volatility. I'm gonna just share a quick chart with everybody. Here's a. I have the screen somewhere open that is going to or it's largely talking about what's happening. The VIX right now, I think, is at its lowest since a very long time. In fact, today, can you guys see the chart? I'm not sure if it's visible, which I'm assuming it is. So
Yeah, it's visible.
yeah, so we are at, this is the 2014 to 2015 things. This was elections in 2015, and obviously things went mad at that time. But we also see that the day results after elections, when results were announced, I think volatility IV fell back to 20s, and then it was all the way down to 11 in this thing. So let me just add the Nifty here. Uh, right here, so I think we can compare it. So this obviously, I mean, there were some massive moves. We are at 14 on the VIX, probably even lower if you look at some options on the VIX, because the VIX is actually calculated as a combination of this month and next month options plus combination of the difference midpoint of the bid and ask of every 3 or 6 at the in the or out of the money calls, 3 or 6 out of the money puts, and the at the money calls. So right now it will be 7,900 to 8,200 or 300 approximately, and so on. So so one of the things that I think I'm going to branch off to Vashistha about, because he knows this stuff more intimately, is about trading and volatility. So Vashisht, you've been talking a lot about spreads versus naked. You've been talking about how, mentally also implicitly a spread gives you a different way to look at volatility
Right, right.
and trading. So, why don't we expand on that? I think this is
First, let's do a cool thing which is possible on Snap is, yeah, you can move this into two panes, right? Charts and EA.
yeah.
So
I
the
mean,
VIX looks like an indicator.
I can do that. I can do. Okay, one sec. I'll have to. Uh,
Remove one of them and then add again. No, no, you need to, I think, remove them.
yeah, I
Now
think
add.
I need to
Or
add
open the Nifty and then add, I
X.
don't know.
Yeah, we could do that.
Or you can move
So,
this also, I think.
so yeah, I mean, I could, yes. So Nifty
हाँ,
and
नीचे वो overlap का there's an option, you can uncheck that. Ah!
this guy doesn't like it. Okay, there you go.
Do the opposite, do the opposite. Open the
Nifty and put the VIX in.
Nifty and add the VIX.
So as a this thing, you can just type the Nifty, this thing, and let me just see if we can add VIX. You just added VIX. I've never. Oh, here you go.
Right.
Okay, so this I'll
इसको
just gonna
line
change it
बना
to
के.
line. Yeah.
Right. So now we have VIX pretty much looking like an indicator. You
Yes.
can zoom out and then you can probably see the cyclicality in VIX.
Yeah, we got the VIX. I think we have it all the way back to 2009. So it'll take some time.
So it
Uh,
anyway, the data is from I think 2nd March or 2nd May 2009, not before
that's
that.
the problem. We can calculate it back, but it's a little more complex because the actual calculation is, there are two things to it. One is binomial versus Black-Scholes.
Yeah.
And so, yeah, here's where it starts. The sad part is, before, through this cycle, earlier
We
part
don't
of the
have.
cycle, we have VIXs of up to 45, 50 continuously through this time. In fact, this one of these days, so I think October, one of those days when the Nifty fell massively around this area, the VIX had gone to some crazy extremes, and you were at that point, when the Nifty was at 2,400, you could easily get a call or a put at trading at 120, 130 points, even when it was like 5 strikes out of the money or
Wow.
4 strikes out of the money. It was just crazy at that time.
But if it was even say go to mid July 2008, around that time, if it was 40 or 50.
This was 45 as
No,
far
no,
as
no.
I
Sorry,
remember.
no, no, sorry. September 2009.
September 2000.
Somewhere when it broke the low and then went to make the fresh lows.
So
September 2009.
2009 was this was the
Just
big deal.
before, yeah, before it fell. Just before it fell, when it was kind of probably, I think it's जुलाई के बाद वाला जो भी line है, vertical line.
This one
So before that, before the fall, right when it just before it made the new low,
here. Oh, no,
before
no.
Vic started. Yeah, yeah.
Oh, before Vic started. Okay,
Uh-huh.
okay. Here.
So you're saying it was around 45, 50, even here.
So let me just do a quick calculation. Okay, so we are at where are we? We are at 2009-05. The Nifty was at 4,352, right?
Yeah.
So that means 5th September 2005. And okay, let me just say, let's just calculate implied volatility of that day. So I'm just gonna there's obviously a billion sites that do it. So let me just see if there's an implied volatility calculator. There you go.
There
And
must be.
then this is a simple one. And then let's see, we'll just overlay on this price chart of so I got 50. Oh, I don't even know if we have 08 December. Sorry, this is 08 September. Then we've got 4,500 calls. So that's probably
नहीं है.
any Nifty. Okay.
How far back does it go?
It does. It does. I don't know how long we've got the data in, but we never thought we'd be looking at 2008
Right
information.
data.
So 08 September 4,500 C. No, well, okay, it doesn't work. So let me just go
Anyway.
to NSE and get it. So
But actually, this is good because a lot of people keep asking or about
oh, sorry, I'm
did
not even. I was looking at the wrong place because I was looking at
right, right,
the.
right, 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 right.
So let me just say here I'll add the symbol of Nifty 08 September 4,500 C.
अरे है
It says it, but I don't think it has it.
loading data.
It's gonna take some time, I think, because this.
Yeah, yeah, better to just pull it
Let's
out of
go to
NSE.
NSE. Yeah, so we got derivatives, and then we'll just go to historical data, contract wise. Volumes 5th September. So I got index options on the Nifty for 2008, expiry 9, and I want the option of call 4,500 for a time period of 2008 September 1 to say 30.
नहीं, it will let you only download 3 months data.
No,
So
2008 ही करता हूँ ना,
हाँ
because I don't need anything further than that. So we say 5th September, so we've got the underlying value of 4532. So I can put that in. So the underlying price is 4532. Exercise price is 4,500. I actually should get 4,600 because that will be
I
technically
don't know.
out of the money. So let me just get that. And on 5th September 4532, 51 rupees, closed at 49 rupees 25 paisa. So we've got an exercise price of 4,600. Days till expiration 5th. I think the Contract end date was 25th, so
25th.
20
20
days
days.
expiration. Interest rate 10, dividend yield 2%, market price 49.25. What is the implied volatility? 16.61. This doesn't sound right. So
It's
was
too
it
low.
really low? 20 days.
Hey, just check. Are you looking at which contract are you looking at? 4600, right.
4600. Okay.
Huh. 25th,
So
it was only 16%. Wow.
that sounds very, very low. And these values sound very low. To be
Huh.
honest, only 49 rupees when 20 days are left to expiry when the Nifty is at 4532. Sounds
Right,
ridiculously low.
right, right.
So yeah, it's possible. I mean, it must have gone down to that much. But the same thing on say 24th September when the Nifty had fallen about 10% from 4532,
Yeah,
4352. Yeah, sorry, wrong number. Man, I looked at the wrong. It's 4352. So I should look at the
ah, right.
4,400. And my bad. 4,400 was trading at 125.1. So we are talking about 4352 and the 4,400 call trading at, sorry, what was that number? 121.7.
125,
So
121.7.
121.7. So we're talking about that now. This must be better. Yeah, 33%. So
Ha.
not too bad. Now we've got to, I think, run a calculator, I guess. Uh, we can do that over here and just say 454352 into 0.33 into is there an online calculator that I can use?
Now I'm just looking at the 20-day one standard deviation. It's about 7.72%.
Okay, root of uh, 20 divided by 365. 336 points.
Yeah,
1 SD.
yeah.
1 SD is 336. So we're
And it
talking
fell to
about,
how much?
where were we? We were here. So
5th September.
5th September. It fell to 4352, 336. So approximately 4,000.
Huh.
It fell a little bit below that, but it
Right.
didn't fall in that expiry. It fell only to 4,100 in that expiry.
Huh. So my point being, even something like 2009 fall, uh, the VIX was working, or the
Yeah, I
implied
mean,
volatilities were working.
implied. So you're almost safe
Yeah,
from sorry, from here
yeah.
to,
To
well,
here.
to here
Yeah,
approximately.
yeah.
That's a pretty big. That's a 10% fall in your
Where
profits.
did we expire? Where did it expire on September 25th?
4110.
4110, right. So if instead of selling a put at 170 deviation, we had sold probably a short ratio spread, would have made almost max profit.
A ratio spread at 1 SD. So that would have
One
been
SD.
4,000.
Right, the
4,050.
4,000.
Yeah, we could do that. We can see 4,000 put. We
So
can check
we'll do 4,000 and this is what is one standard deviation? 4 3.
336.
So 3 5 to my 336, 4,000 आ रहा है ना? So
तो
4,000 4,100.
हाँ वहाँ पे उस टाइम पे 450s भी काफी
Yeah,
were traded well.
traded well.
Open
Okay,
interest. So
so let's do
4,000.
4,040 50 or something.
4,000 was at what, $22, and 4,050. Well, okay, not much open interest. So let's go to 4,100. So 4,100 was at 50. So 22 and
No,
50. Yo,
but you wouldn't
that's
have got a net credit.
net credit, correct. So that
Trade never came.
means you'd have to go to 4,000 and for 3,900.
Huh. But I don't know why you won't get a net credit in such high volatility. Usually you should.
It's too close.
It's too
It
close.
needs to be a little bit higher than 1 SD. So we're
So
talking
try
50.
so try 4,149. That won't work.
We can try 40-50. There's not much volume there.
Yeah.
You would have got that because you got in 5th September 42, 22.
40. Okay.
Just 2 rupees net credit.
Huh. ठीक है. So even if it was only 2 rupees, but it would have ended with a max gain.
It would have
Almost a
ended
max
with
gain.
50 rupees, so 48 rupees, 52 rupees would have made.
Yeah. So
Uh,
the simple point just I'm trying to make is even in a time like that, it was possible to trade probabilities.
yeah,
And
I think I agree. It's, I mean, in
there's a lot of fear that अरे ये हो जाएगा वो हो जाएगा, but I mean if you don't go crazy big writing naked options, and if you do some kind of spreads based on probability, I think
yeah, it's,
chances are you won't get too
and then you
hurt.
have so many options of being able to change stuff. Like for instance, even though it closed at 4,100, it touched 4,072 in the middle.
Yeah,
So obviously at that time, things would have looked a little hazy. Like for instance, this was the 4,050 contract. It
right.
was trading at 130.
Yeah,
And what was the 4,000 trading at that time? So if you look at the 4,000 for the same day, you're talking one is 130. That's the one that you were long. And the one that you were short was trading at 100. I think this is a problem because of the lack of liquidity.
yeah.
So you would technically actually see a higher loss than you would have otherwise noticed. But at this point, you could still have, for instance, gotten out of one if you liked,
And converted
or
into a put spread.
a complete put spread where you would have you gain a maximum benefit if it falls any lower,
Yeah, yeah,
or you could have written a call spread at this point, considering that the whole trend has changed,
yeah.
and a call spread would have yielded you a lot because by this time, I'm sure at this time,
The IVs would have gone up.
would have been like ridiculously high. So you,
Yeah,
at this point, writing a 1SD call spread would
yeah.
give you literally the whole thing, whether it's a ratio or or just a naked, just a single spread. Um, but I think this also makes a huge difference in stocks. We've seen this in Dr. Reddy's, right? So
Yeah.
I think even the Dr. Reddy full move. Let's just see if we can
Okay,
get this.
someone's asking a question. What was the VIX just before 2009 election result? This we must have on the chart. VIX, India VIX होगा.
हाँ ये है. So this is right here.
This 2009 result. This is very high, 50.
Yes, that was on the day of the result.
Right.
Now,
Okay, let's see what happened if you wrote a straddle on election day.
I know. I wrote a straddle on election day.
What
So
happened?
it was very interesting. It gave us a 400 point straddle. It is actually a rotten straddle because I'll give you an example. So how I'll give you the this thing. So we lost money, but we didn't lose anywhere close to the amount of money we would have lost otherwise. There was
Okay.
a 600 point move.
Huh.
430 of that was covered.
Wow.
So we got 430 points premium on that day.
And this is the day it went limit up.
Yeah, it was 3,700. We had written the 3,600 straddle.
Okay.
Okay, and I'll give you the value. So we're talking about what date is it? It's
But if you had held on, you would have probably survived with a profit.
yeah. I mean, if we had held on till here,
Yeah.
that was 4,122, but it's still quite high because 4,122 was 500 points away. We
Okay.
got out approximately here 3 days later.
Okay.
So at 4,200, literally paid the full. The problem actually was in the way we took the straddle. It was not just a plain straddle. We went and covered the put side
Okay.
because at this point, India has had 3 down moves,
Okay.
but down circuits, no up circuits.
Okay.
So we had no
So
history
protecting
of an
against
upside.
that.
We got that black swan that we didn't protect against. Okay, so that was the stupidity in the whole thing. But otherwise, yeah, I mean, we could have survived.
So if you
But
had, so you had paid for a long port. If you had not, you.
if I had not, we would have got the full 430. We ended up getting only 300 and odd rupees. So
Okay.
we lost, we got out at 4,000 up this day, so 4,100 something. So even then, there was some because options were, I mean, they were liquid, but there was no premium
Hmm.
on top. I mean, there was no time value,
Acha.
further time value. So we were able to get out at a fairly low cost. So let me just see on that day what happened. 20. Let's look at the expiry for 2000.
अरे it must be on Snap now ना 2008 का तो था कॉल नहीं था sorry
मैं
it
ट्राई
just
करूँ.
took a long while to load but anyway
वो
it
अच्छा
will be
आया
there
क्या?
let's see
ओके, नहीं आया, नहीं आया, नहीं नहीं. I
इनका
don't
नहीं
know
आया
whether the 08 is a problem. I have to check out the parser. We
okay
typically take 08 and put the numbers, but I haven't had time to check that. So let me check this. This is September 2000. We want 2009, na?
May
So we
sometime
want
so
May.
same date 16th में होगा
15th May was the Friday. Results
हम्म
came on Sunday, so the next day was the mad day.
okay
So let me just run it through till the whole date. So we've got this uh, 31st. So I want the CE, which is for the May series of price 3,000, say 600, just to give you an idea. 3,600 call on 15th was at 210 or about 200, let's say just 200. And for the put was at 119. That sounds very low. We got 400 odd rupees, I remember, because maybe we had written it a couple of days earlier. This is 15th May, 119 for the 3,600 put. Okay, that was, I'm sorry, I forgot the other one. 119 and, oh, sorry.
120 something
This whole thing got screwed. The NSE website is not very useful. So we got me, we got a call for 3,600, and I want
yeah the dates are correct
thank God that's there. So we got 199. So 200 and one on one, and the
नहीं अरे look at this हाँ right 200 something 210
210,
on 14 on 15th
15th, and on the 15th it was about 119. So 210, 119, 330.
right
330 was the implied volatility. So, I'm sorry, was the premium.
right
What was the IV on that day? You said 50, right?
hmm.
Where is it? Here.
No, the other one
So
on
we're at
15th.
19th. Oh, so the next day also it had
It
gone
went
up.
up. It went up the next day.
So on this day it was, what was it?
52.
52. So the calculator will be, we had what, 10 days to expiry? What was the expiry date? 28th, so 13 days to expiry. So you got, well, so I got the square root of 13 divided by 365 into, oh, well, this multiplied by what was the Nifty at? The Nifty was at 3,672. 3672 and multiply that by the implied volatility, which is 52%, 360 points. So you are actually getting a
Same, almost the same
almost same 1 SD premium,
premium in the
which
straddle.
makes sense because 52% versus 67% is 1 SD. So
Yeah,
330 versus 360. So that sounds close.
right.
So we are at this point. So, and or rather, we are here, and the thing shot up from here to 4,323. So yeah, it didn't give you enough protection.
Right,
A 2 SD, it was literally a 2 SD move
right,
because it
right, right.
moved from
700.
600 points, yeah, 700 points, 650 points. So 2
Right.
SD. Yeah, that was huge. So if you wanted protection, you wouldn't use the straddle. Even there, a ratio spread would have hurt you a little bit
Hmm.
because 1 SD ratio spread would have but then this is a once in a while thing, I guess. You won't get this every day. And
Right.
in
Nah, so yeah, I mean, writing something on a when you know there's a huge event coming.
Yeah,
That's
but I mean, look at what we did recently. Okay, I mean, we basically look at the bank nifty on the 2nd of December. Okay, and the 2nd of December was when the RBI event happened.
yeah.
So if you look at when things happened on the 22nd, this is I think the 22nd. Okay, let me just see if we can get a longer period in this.
No, not 3 days. Just do a daily.
And,
Is it 10 minute?
I need to get longer data. Well, I
Hourly,
need hourly data.
hourly.
Okay, here you go. Hourly data and starting with December. So this is December, I think 2nd when we got news of the rate. I mean the RBI meet.
Yeah.
This would have been approximately 11 o'clock on the 2nd of December. I'm not sure. I don't remember the dates.
Hmm, 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 hmm.
See, uh,
It happens on a Tuesday, na?
happens on a Tuesday, you're right. So
Yeah, it was 1st December then.
1st December.
First
Okay.
December was a Tuesday.
Okay, so 1st December was a Tuesday at 11 o'clock. This is the time in which the RBI event happened.
Yeah.
The same time, IVs were high and they started to fall after that. That one day, I think we saw a fairly large fall in volatility, or the next day itself. Because if you plot the bank nifty, what was it at? 17,400. So 17,500 straddle. Um,
No, no, no. Do the. So it'll plot December, or do you need to mention December?
Sorry, I forgot. I should have.
No, the query string, is it just December or is it?
No, no, I plotted everything. So let it be. I mean, because we're still in December, so we should be fine.
Acha.
So this is the hourly for December, and um, so the straddle at that time. Okay, let me compare it with the bank nifty. We should be able to get this going. Okay, so this was the nifty around 11 o'clock on the well here
Right,
10 o'clock. 11 o'clock was the policy, and after
right.
that the straddle just kept on dropping in value. I mean, of
Yeah.
course, at some point when the
But
nifty
but
dropped.
look at the change in Bank Nifty.
Yeah, I mean, talking about, well, okay, let me
Scale डालना
move this
पड़ेगा.
to scale on the left and say that we need to put the scale also so that they can see it. Yeah, so the Bank Nifty fell from
500
17,500
points.
to 17,000, more than 500 points. The
Yeah,
straddle didn't even make a new high over here.
yeah,
You literally could ride it, it's
yeah.
just,
And it
it,
fell even further.
it fell further and
How
then,
much? How many points one could have made? 100 points on by
we
writing
made,
that on a
no, on
day.
that first thing, we made 100, we made only 80 points, but because it was a strangle and we kind of got. So on that day itself, 11 o'clock on the first, the straddle was at 777. If
Right.
you aimed, I mean, if you'd kept it going for a while, even then, you would still, the lowest point of this was 753. That's not
Hmm.
much. Only on 500 straddle. Let's look at the 17,000 straddle. It seems like the 17,000 wasn't. I think we were trading this guy, Strangle.
The strangle. Yes.
So if you're looking at the Strangle, that kind of fell a little more in
Right. Right.
respect
Right.
to. I think this
Yeah.
was the one that fell a lot more. So at this point, we were talking 11 o'clock on the first at about 614. We saw it fall all the way to in like 7 days
452. Hmm.
to 463. So from 614 to 462, is about 150 points. That's 4,500 on a investment on a capital of 1 lakh,
Yeah,
which is about
and
4.5.
yeah, and that capital requirement has gone down to 80K now for a
Yeah,
straddle on Bank
imagine. Yeah, yeah. In
Nifty.
fact, you take the same thing now. It's the 17,000, 17,500. We are at 65 rupees, 8 rupees now. And even though the thing had gone up to 840 rupees, obviously, because
Right,
the Bank Nifty was here, right?
right,
16,200.
right.
And then from there on, boom, it's just gone one direction. So,
But I think the best part about these charts are it actually shows you can probably trend trade straddles.
yeah. I mean, look at Jan, for instance. If you're looking at the strangle, I'm just going to change this to the same strangle, 17,000, 17,500. Okay, it's not, let's just assume for the sake of completeness, because we would not take this strangle earlier than this. So 16,000, so let's say 16,000, 17,000 strangle, just to get an idea of how the trade would have worked. Even though the Nifty fell a lot, I mean, Bank Nifty fell a lot and rose a lot.
Yes. In fact, Nifty has made a -5% and a +5% move in within this month. I have not checked it on Bank Nifty, but would be
Yeah.
higher.
I'm just using the Jan now to get an idea of the options. I hope it loads. Yeah, there you go. So it went down, the straddle went down. If it's triangle, if it went back up, the triangle went further up. So this is like a pretty, it's like a trend trade with
Right, right, right.
all these things.
So actually don't even care what price is doing. You can actually look at, and this is, I think, we learned it from AP.
Yeah,
I had never seen a straddle plotted before.
yeah.
Showed
Trading
it to
is seriously, a straddle plotted and traded is like, and it's his
us.
idea actually started off with. So it's pretty interesting. No, and now, I mean, we can't currently plot ratio spreads and all that. But one of the problems with using like a tool like a options oracle is
Hmm.
if you look at let me just share that with, uh, let me just see if we can share a different screen. Here you go. So this is the Nifty, uh, right now we're talking about say Jan 16, and I wanted to do a ratio spread. Today's ratio is approximately at 14.
The screen is
Whatever.
gone, by the way. I can't see your screen.
अच्छा गया?
Huh.
Oh, now?
Presenting to everyone. Okay.
I
Maybe
can still see it.
okay, maybe something on my end.
Would I just switch off and back? Uh, okay, we've got questions also. And by the way, we can go to Slack and also get questions if anybody's on Slack.
Abhi
Uh,
at 9:30. I don't know.
no, there is no. Oh, dude, on Slack there is no time limits, man. Everybody
Yeah,
can.
somebody is there all the time.
So where are we now?
Yeah,
We're at 7,900.
Uh,
Slack, there's a very heated discussion going on some
HDI,
some
no,
micro cap company.
HFCL, I think.
Yeah, yeah. There's or no. There's that. Okay, there's another one. Well, today 1SD is what was 7,600 approximately 300 points. No, not even 300. Let me just see. We are at 7,9 something, and 1SD for a 14% move will be 0.14 into 7,900 into the square root of how many days left to expiry? We're talking about 1 month in a few days, so just say 31 divided by 365. 1 month range will be approximately 300 points. So about 7,600 is 1 SD. Uh, so right now we do a ratio back a put spread, right? So we would go
Balls.
put. I mean, right now because the index is up, and
Right.
so either 7,600, 7,650. So we would have say 150 quantity on this. Oh, this is 7,600. I want to be short put 150 quantity. Okay. So, sorry, we're 75 quantity. Does this make any sense?
No, do the opposite.
I
This
should
one
be
will be,
long, correct. I should be
if you're
long
doing
this
for a
one.
net credit, then
Yeah, I should be short two puts, correct. Right. So this should be a credit of uh,
1,000 bucks,
1,000 rupees. 1,000
1100.
rupees. Yes. And the problem with this is, this. So if you go use, I don't know if you can see this
No, graph. Go to
analysis
graph.
graph. Can you see this?
I can't.
Because I have to share that window again.
Oh
One
God.
second.
Oh, you need to share it separately. Acha.
Yeah, so here you go. This
Yeah,
is
it's
the
clear now.
ratio. So, okay, here you go. So this is where we are. Anything above 7,650 makes a profit. This is at expiry only.
Yeah, but
And max
this is which month did you do? Jan.
Jan. So we're talking 7,534 being break even.
Yeah,
There's no break even on the upside. Everything above that is profit. So how
right.
much profit is the question? Over here, the max profit is approximately 4,800 rupees.
Yeah.
And loss is unlimited on beyond the side. But you could actually look at it in a different way also. You could say, give me the profit
So
versus the end.
so in from anecdotal data, I remember getting anywhere above 40 points on spread like this on Nifty, the good trade.
Yeah. No, I agree. In fact, so you're like, for instance, this strategy, 40 points is a good thing. Okay. 40 points
Right
would
now,
make,
IVs are ridiculously low, so
yeah, so
you
you
won't get
don't
anything.
you don't get
Yeah,
much. So doing a ratio spread right now would actually be non-beneficial. I think it's great to do it just before results so
yeah,
that the results on the index won't move the index so much. It'll
right,
move stocks individually.
right.
But because options are looking volatile, the index options may also see some high IV. Hopefully,
Yeah,
I don't know if it's true, but so I mean the same thing if you look at an IV that is current, so which is about 15%. This is what it is. If IVs were to rise, then the whole profit matrix. This is actually a plot of expiry day versus sorry, not
volatility.
expiry day, profit and loss versus the date which you check it out for. So, for
No,
instance,
no,
if the Nifty was right here,
ha.
if the Nifty was exactly where it is, and
No,
yet
this is for expiry. This is for expiry
no, this is for if the Nifty is at 7928,
on.
then on today, which is
Acha. Aage wale
uh,
दिन.
so where we are right now. So
Hmm.
right now, actually, we should be at 14%. So 29th December. So this is where we are. Okay, approximately break even.
Hmm.
We'll keep increasing. So tomorrow, if the Nifty is at 7925, we made this much profit. Day after tomorrow, if it's 7925, it's so much profit. Now let us say in 10th Jan, the Nifty has fallen to 7,800. So I'm just going to
No, you're changing the decimals.
7,000.
You need to type in each at a time, one
Yes.
number at a time. This is option oracle special.
Okay.
Type one, click again, type one.
Okay. So if it's a 7,800 now on 10th Jan, you're still profitable on the strategy mark to market if the implied volatility hasn't changed.
Yeah.
If you change it further, so by 17th Jan, your break even then becomes 17th Jan, your break even becomes okay. Goodness God. So I have to change this to 7,700. Yeah, well, a little bit more. Your break even is probably 7,750 or something. Yeah, your break even is 7750 on 17 Jan. So essentially, your break even keeps going upwards as the days pass because of the time decay
Yeah, yeah,
and so on. So this is actually mark to market, and the last few days will be crazy because at that point, your as the day goes closer and closer, your break even point goes closer and closer to the 7534. uh, assuming the implied volatility remains the same. So right now, it's not a good time to write it, but you can see how volatility will also change over the days. This analysis window has actually got a good. Let me just see if you got that going. So yeah, so if you use the analysis window, uh, this one, okay, I have to share that again. Oh goodness, forget it. Okay, so you use the analysis window, you can check all of these parameters in a matrix saying, okay, if this changes to that, what happens and so on.
so
So
I had written, can you go to the chart again? The Nifty versus
let me just
VIX.
go back to the chart. Where is the chart? I'm sure it's there somewhere. I hope I didn't shut it down. No, I didn't. So it's here. Nifty versus the VIX.
Yeah.
One second. Okay, there you go.
Right. Now, can we zoom in? Can we see? अच्छा इसमें hourly नहीं है ना? But can we go a little zoom in to s- just
This is 2008.
no, we can go to November, December अभी. The transition from November to December expiry.
Now is it today's?
हाँ, now today's.
Let me just get today fight because we've
You can press वो बीच में reset वाला. It will I think zoom into the current date.
oh I see. Okay, I have no. Sometimes I haven't used my own these tools myself. So okay, here you go. So we are at 8, 9, 11, 20.
Right. So just before December, I mean, what was expiry? 27th, I think. 26th, 27th.
26th.
26th, na? Right. So
Yeah.
26th, what was IVs were around 17-ish. 17-ish, right?
IVs were around 17ish.
Yeah.
Where are they? 16.7, correct.
So this day I wrote because the trend had kind of changed. So I said, okay, to take a this is an example of how to take a bullish view using volatility is you take one standard deviation came to around 7600 at that time, and if you see 7600 is also close to the previous low.
Okay.
So that's when I wrote the 7600 7650 ratio spread for
Yes.
for about I don't remember,
I
30
think 30
bucks.
rupees. 30
Yeah,
rupees.
30 rupees.
So to the 1:2 ratio, you bought 17650, bought
650
sold to
to 2600.
7600.
Yeah, yeah. So, so I did that. Then I beach my what I did was when it started going down, I squared off. You see, it went up and then went down again. So by the time it went up and came down, the 7600 was around the same level. The
I
put.
see.
I mean, it went up and came down. So in that, due to time decay, it was more or less same values. I just squared off one, converted into a put spread
Got it.
because again I was trading, looking at the trend. I converted into put spread, and then when it went down to about 7700, I sold the 7600 put again and went back into my ratio spread.
Oh, so you kind of did a put option trade in this interim sometime.
Now I just took off one put at the same price I had sold it for. And when it went down 7700, I sold the 7700 put again for a higher. So my net credit in the position increased.
Got it. So instead of 30, you got something like 35.
So yeah, I got around 40 then.
40.
So I increased the net credit by about 40, 10, $12.
Which is pretty decent. I mean, that means your break-even point had gone even further down.
Yeah. So break even would be around 75.50, I think.
Yeah,
Uh,
75.50 is where you. I mean, that is on expiry day.
on expiry day. And then we fell further to 76, and then we went, and you see there is a small wick spike there. It went to 17 point something. So on this day when it went back up, I sold another ratio spread at 7470
350. Yeah, I remember that.
or
So
something.
74.50. Yeah, I remember that. That was another 30 rupees.
Another 30 rupees.
Yeah, 30
So
rupees is like
40,
2% or
yeah,
more
so
than 2.
40, 30. And then because this was the month, and then in 4 days, that 7400 wala spread was down to about 1 or 2 rupees spread.
Yeah, awesome, awesome.
Because very little time left. So $70 trading very high probability setups in terms of just using
SD.
volatility and
Yeah,
little bit of looking at price. But yeah, I mean, yeah, there's you don't have to be too directional. You don't have to be you can be very wrong in picking direction and still trade positional using options. I think
no,
that's my
and
point.
honestly, one thing is, let's say, sorry, you had gone down
Yeah,
even further from here.
right,
You would have lost another 50 points.
right, right.
Okay, but if you tried anything with the future
Yeah,
from any of these points, you would have been down more than 100, 150 points at least.
yeah. So future, I
So,
think, unless you are well capitalized in that sense, where a loss of say 100 points is just 2% of your portfolio or your capital, I wouldn't trade it this way, positional this way.
yeah, I mean, this is more difficult to trade positional, and it's uh, here you at least get this. I mean, there was a good reason for 7,550 to hold because you got
Yeah,
this guy.
yeah.
And there's also the fact is this was the Fed meet. That's
Huh.
also why the IV spiked.
Yeah, the idea is right.
And
But
I
it
think
was
almost
yeah.
everybody knew or everybody felt that market would kind of bottom out on that day. Because the end of that, we talked about it on Slack also. The end
Yeah,
of the uncertainty or kya hoga types.
yeah.
It'll.
But look at the position. If say I have say I had both of these positions on, right? I have sold at that point on 15 December or sorry 14 December. I have what do I have? I have a 7600 7650 ratio spread, and I have sold a 7400 7450 ratio spread. So now if something happens, if we continue to go down after an event, I would assume that it will continue to go down, and I can convert again. I can take off one of the short puts from the 76 70 50 ratio, convert it into a put spread, and keep the 7400 wala ratio spread on. Then my bet is I'm short the market using the put spread, and B, I don't expect it to fall below 74 sorry 7380 or something. And if it expires around 7400, I'll make max profit.
Yeah, the max profit is the interesting thing, but like a bonus because you end
Ha
up with this
ha.
one, you're long one higher strike, you're short
Yeah,
two lower strikes. So if it ends
yeah,
at the lower strike, the
yeah,
higher strike gives you the full
yeah,
premium, I mean the full intrinsic value,
yeah.
and the lower strike expires at zero. So
Zero.
essentially,
Right,
you're
right.
you're, you're sitting on that, and that's pretty interesting because I mean you just have to wait this out because
Yeah,
volatility is never hardly ever in one direction, and
yeah.
you always end up with some move or the other moving around. So,
So essentially, with these kind of things, you're playing cyclicality in both price and volatility.
and volatility. Cool. Hey, that was good. I think it's great, good format, interesting discussion. I hope Dave and Abhijit, you guys were around, so I don't know how it was for you guys.
Yeah, I'm learning a lot here, especially in the last 2 3 days on Wix and everything. Well worth the time spent.
I
Yeah,
don't know
no,
if Deepak has the archives for that hugely long discussion. We can
Oh, I
probably convert it
actually,
into.
I converted it into text and saved it.
No, it'll be there. We'll get it on Snap. So it'll come with the images and all that. So I think Raghunath has got a lot of the stuff on
Yeah.
IVs done. We're also somewhere. I mean, it's December 29th, so people aren't going to be around in the next 2 days. But early January we'll have this wall lip piece also going.
Maybe a write-up, Deepak, would be good as well.
Yeah, I think maybe interesting to do both a tool and a write-up because then you can calculate the IV of every stock going past. So for Nifty we have the VIX, but Nifty is not the only instrument to trade. So we want it on Bank Nifty as well and some of the others. So apart from the write-up piece, we'll like to also do this tool piece that'll add up.
In fact, interestingly, Raghunath shared a graph today. It shows almost perfect correlation between Bank Nifty and Nifty IVs. So actually, VIX is a good proxy. Yeah.
Which is an interesting proxy, at least for Bank Nifty, because Bank Nifty is so closely traded alongside.
Yeah.
But I guess, yeah. So guys, thanks. I think it's been a late evening, so I'll leave. Guys, so thanks so much for watching. Thanks, Vashistha.
All right, guys.
Thanks.
All right.
Yeah,
We'll do more of this.
Thanks, Vashistha.
Yeah. Good night, guys.
Good night.
Good night.